How you guys doing? This is Greg McLeod from the Forex Cash Machine, and so good to be with you today. I know I had a question from one of my members of our trading group, and he basically asked, "What are the best currencies to trade during the trade war?" And I thought that was a really good question that I think a lot of other my subscribers will be interested in knowing the answer to. And so I wanted to spend the next couple of minutes to be able to show you what are the best currencies to trade during this time. Now we have basically Trump in the United States accusing China of unfair trade practices. It's been going on for years and years and years. And so in order to even the playing field, to make things more fair, he's proposed a series of proposals, but China's not cooperating. So what they're doing is they're going to place, the United States is placing a tariff, like a 25% tariff on imported goods, in order to penalize China for not playing by the rules. Now, what that's doing for international trade is throwing everything into chaos because the market doesn't like change. Chinese exporters, if they can't sell their goods, their stock market starts to fall. There's also talk about China being forbidden from participating in the U.S. stock market. So a lot of money that's in China will not be able to reach the United States either via from trade or via from actually participating in our equity market. And that's just throwing everything into a lot of confusion. There's a lot of multinational companies in the United States like Apple that require Chinese components that are made at low cost. A lot of cars manufacturers need Chinese components. So a lot of these components are going to be penalized. So our American companies are going to be penalized too. So that's why we're seeing volatility in the stock market. All this means for us as traders is this is a lot of confusion, and a lot of money is fleeing away from what we call risk on currencies like the Australian dollar, and they're running away from the New Zealand dollar. They're running away from the euro. They're running around from the British pound. The British pound has another set of issues with Brexit. We're not going to talk about that right now. But anyway, with that Brexit fear, with all this kind of uncertainty around trade that's going on right now, money usually runs where it's appreciated. It's going to go where it's safe, and actually a safe haven. And it doesn't appear to be a safe haven, but it's actually we'll talk about that, is the Japanese yen. Now, the Japanese yen is a currency that traditionally receives different flows from other countries. They will flow their money into the yen. Yeah, the Japanese yen is a safe haven currency. It's what traders who have basically borrowed yen at very cheap rates in order to buy riskier assets. But now, since those assets are going down in value, that yen carry becomes expensive. So now they're going to unwind this carry trade and sell off riskier assets like the New Zealand dollar, selling off the Australian dollar, selling off the euro, selling off the pound, and they're putting it back into yen. Money is coming back to Japan, going back into the Japanese yen. And so I'm going to bring up a chart to show you the Japanese yen and how it's actually going. Now, usually with the yen pairs like Aussie yen, Euro yen, dollar yen, what's going to happen is you've got the chart goes up when the yen is weak, but when the yen is strong, the Aussie yen and Euro yen, those yen pairs, will actually start moving down. So it's kind of like upside down. And I'm bringing up a chart now. I'm going to bring up a daily chart of that. Move all drawing tools. Right. Okay, so here we go. Here is our chart here. Okay, so here's the Aussie yen, and this is a daily chart, and we can see we've been making lower swing highs and lower swing lows. This is the 200 simple moving average, and we can see that the yen has been strengthening. All right. We got a trend there. We can even go out to a weekly chart and see this as well. Okay, so the yen getting stronger, Aussie yen going down. We can look at Euro yen JPY going down as well. Lower swing highs and lower swing lows. Big long downtrend. Looks like it's accelerating. We can even look at something called the Japanese yen index, the JXY, and we can see that it is starting to take off and move higher. We're looking at a weekly chart, and we can see maybe if we use a little Elliott wave here that we're compressed in some type of a triangle, we could break and move higher. And we still haven't challenged that line. That trend line comes in about 92 on the JXY. Okay, so the Japanese yen benefiting from any type of fear, war, missile launches by Rocket Man over in North Korea. All those the yen big beneficiary. The other currency is the dollar. The old U.S. dollar. And we can look at the move all these drawing tools here, and we can see that we've been on a tear moving higher through all this uncertainty. So even though higher demand for the for these various risk assets, and the need for traders to find safety in bonds. They buy bonds, they need dollars. So by the dollar is going higher, interest rates are going lower, because the United States government doesn't have to offer an attractive yield. They say, hey, you want safety? Buy bonds. You need bonds? You need dollars. Dollar goes up, right? So we have the dollar going higher. Higher swing highs, higher swing lows. We're at that 98.14 area, and we could move to like 100 to 104, the old high that we had back in 2017. So we have a pretty good uptrend in the U.S. dollar. The dollar is another safe haven, a place of safety, right? And the reason why is because we have people running into the bonds, and you're seeing yields actually fall. And let's see if we should get this going here, and remove all these drawing tools. But you can see yields are falling. This is the U.S. government 30-year bond is US 30, right? Okay, there we go. Okay, the price is going up with the TNX. TNX is there you go. This is the yield on the 10-year Treasury note, and it's falling because people are running into it. And as more money comes into bonds, the interest rate drops. So this is like panic mode. We're at a low that we have not seen since, almost December, when we had the big crash, right? So as the people buy more dollars, they're getting into these bonds for safety. Sell and demand go away is full effect, and we can see the S&P 500 also dropping down. So puts on the index. Look at this drop off here, trend line break, and goodbye. We just keep moving higher. In fact, trying to pick a top on this was kind of a hard thing to do. But you can see that we broke this Fibonacci level, 2813. We could probably get down here too. All right. So that's, so looking at the Japanese yen, looking at the US dollar, and looking at selling anything, the commodities are priced in US dollars. So commodities like gold, like wheat and corn and soybeans, all should be moving down as well, because and including oil. Okay, so you're looking for what to trade, sell all commodities. And again, it's not a recommendation, but you can see that the commodities are like oil is dropping as well. Okay, so we have oil. We could probably track gold. But if you want to find out more, what I want you to do is click the link below, and you want to learn about my system, or to reach out to me for a free consultation. You go ahead and click the link below, and I look forward to seeing you on the other side. This is Greg McLeod from the Forex Cash Machine signing out. Peace and pips. Cheers.